Morning, Steve here in Chicago with the morning grain comments. Well, it's Friday. Markets had an interesting week with all the talk about maybe a trade deal later in the month between U.S. and China. We also had the Fed come in and talk about lower interest rates. We've had equity markets take off on the upside, and we've had grains kind of mixed for the week. Wheat prices here in Chicago down roughly 11 cents. Corn's down 2 cents and beans up about 14 cents. I think beans caught a bid because of the fact that the funds were short, and they covered their short because of worries about weather. Yesterday was an interesting day in which the export sales data continued to be, let's say, on the low side of what we'd like to have for like a demand-led rally. The competition for U.S. exports continued to be high. South American beans, South American meal, South American corn. Also in the Black Sea, you've got wheat out of Russia, corn out of Ukraine, and cheaper wheat out of Europe. So that's probably not going to change anytime soon. We did see that yesterday the National Weather Service, NOAA, put out a 30 and 90-day outlook. 30-day outlook was wet and cold, and so basically the market rallied on that news. The problem is not a lot of private weather forecasters agree with that forecast. In fact, most are looking for July to be dry and warm, August and September to be dry and warm, and maybe an early frost. So I think the initial fact that the weather starting after the 4th of July or even after this weekend might be warm and dry is a little bit negative to prices. It'll allow for the beans to get planted. It'll allow for corn to kind of grow out of its early problems. But too much warm and dry could actually be supportive. So I think in the long run, corn is going to make new highs if the weather turns warmer and drier this summer. Beans and wheat might follow. Beans fundamentally are bearish. So is wheat. There's just too much beans and wheat in the world. But if the U.S. crop continues to get smaller, we could see a little bit of premium in the marketplace. We also saw that China came out and said that they hope that if there's renewed trade talks, that the meeting between the two presidents, that U.S. officials come with a more problem-solving attitude, and they must stop threatening new tariffs. The USDA said it will allow farmers to work cover crops planted on acres the farmers previously declared prevent plant in an effort to service land damage by flooding, and farmers may now begin hay, grazing, and chopping these fields on September 1, a few months earlier than normal. We also note that the funds yesterday, pretty much net buyers across the board. We still show that they are long a little bit of wheat, long about 190,000 corn, still short about 40,000 beans. And again, over the next, let's say, 4 to 5 days, there'll be heavier rains across Iowa, parts of eastern Kansas, Oklahoma, parts of Missouri, and most of Illinois. There'll be rains in other locations, especially in the eastern Midwest. We expect maybe 95% of the corn to be planted as of Monday. It could be a little deceiving because if a farmer decides he's not going to plant anymore, he goes from, let's say, 80% planted to now he's 100% planted according to the USDA. Beans should be close to 90% planted. We would expect crop ratings maybe to show a slight improvement in corn in the areas that the weather's been good. And we would expect USDA to bring the winter wheat crop ratings maybe down a little bit because of the excessive rainfall. Spring wheat continues to be rated higher than average, but a few areas could use a rain across the northern plains. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.